Hey guys, Mike here. So interesting day in the market. Obviously started off super red, unlike yesterday with the Russell down 1.5% at one point in time. But again, dip buyers came in, tried to make it recover, ended up about 0.5% down. SPY, QQQ, one point in time. I think they actually did go green at one point in time, then sold back off. But you know, they were still down as well. A lot of stocks gave up a lot of gains that they had yesterday. So it's kind of all over the place. And we're gonna look at some stocks today that actually were pretty dang green, right? And you want to start, I just told the members in the video, you want to start looking for those stocks when you come into maybe that might be a sign, a month or two that's got weakness into it. What stocks are still green on those red days? What's still showing strength? Where's big money still willing to put their money? Okay, that's what you want to make sure you keep an eye on. And we did have some jobs data come out there. I'm going to show you that as well. And we're also going to talk about, how there is like two different economies going on right now. Okay, I told you yesterday, I talked about this today. I had a great conversation on a vacation I was on this weekend with 3 or 4 different families at the lake, just having fun with our families and, having to meet somebody who, and I already knew him, but he's the son-in-law of one of our best friends and stuff. So we were talking because they got some family business and everything. And one of them's happened to be a pawn shop. Okay, and so I'm going to talk to you about what I mean by that because I realized in my lifetime, for whatever reason, I've never been in a pawn shop. I don't know why, but there's something that goes on in pawn shops that I was just unaware of, and you might be unaware of it too. And I didn't know about this, but a lot of people use pawn shops for this exact thing. And so we're going to get into that right at the beginning here. But I did want to go ahead and show you the jobs data stuff. Obviously, jobs opening and the quits rate. You can see job openings are coming down, and then the quits rate is coming down as well. But obviously, when you look at a historical level here, I mean, the job openings are still way, way up there. And if you look at this chart here, you can see what I'm talking about. It's around 1.6 now. And I mean, if you go back to, leading into 2020, it was like 1.3. Before that, it was below 1, and so still historically high. And a lot of people say these jobs don't exist. Well, if that's the case, they didn't exist before either. And it was still way lower, so you kind of take it with that grain of salt. But you got less people quitting their jobs as well. So just keep that in mind. And some people who are retired actually coming back into the workforce. Now, I told you yesterday about diesel prices, right? And one thing this chart I found shows, usually diesel prices and CPI inflation kind of follow hand in hand. There's a lag there, of course. And what we showed you yesterday, diesel prices are going up, right? But because of the way they calculate CPI, with a delay and everything, you wouldn't see this make a difference at all anyway, and especially because of the percentages they use, since housing makes up 40%. Even if diesel went through the roof and housing came down, you'll still see a drop in CPI. Just keep that in mind. But we'll see how it affects it, over the few months and stuff if that continues to take place with oil and everything else. Now, I come across this, and this leads into my conversation about the pawn shops, right? So 61% of Americans say they are living paycheck to paycheck, and this just came out Monday. And understand how they calculate this. I always take these with a grain of salt anyway, but they went in here and basically looked at Lending Club's new research, and they only polled 4,602 U.S. consumers, right? So that is your pool of people here. And when you look at that, when we look at the actual data and stuff, you can see right here, 21% share of the U.S. consumer living paycheck to paycheck with issues paying bills in June 2023. 67% share of U.S. consumers living alone who live paycheck to paycheck. And then 34% portion of parents who share a bank account with their children. And with this conversation I had today, one thing I didn't realize, so I learned something, and I'm the only person on vacation to ask these kind of questions because I'm the only one who has a YouTube channel like this. And I like to get, real, like, on-the-ground data, right, from people that are in the fight, so to speak, okay? Instead of waiting for some delayed data to come out. If I can get it right up front and hear it from people that are in the fight, in the businesses, things like that, I like to get it for you guys. And one thing I didn't realize was how many Americans use pawn shops for loans, right? Like I said, I've never been in a pawn shop, and it's actually pretty staggering. If you look at this right here, this came out just last year, about 9 months ago. About 30 million people who don't have a bank account or access to bank services use pawn shops every year. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And one thing to keep in mind, it's not just that. It's like this gentleman told me. He said, really, the reason why they come use those pawn shops, when they do is they take their, like a gun, and put it up for a collateral, or, you know, some sports cards, rookie cards of somebody, you know, they'll put up collateral that's worth something. And one reason they do it is because they're ashamed. Like, they don't want anybody to know, right? So you go in a pawn shop, nobody's thinking you're going to take a loan. They think you're going to buy something or sell something, right? But you're going to a bank, you're either going to deposit or take loans out, right? And so they don't want anybody to know. And they'll just come in, like you said, and they'll say, hey, you know, I just need $1 grand to get me through the month. You know, here's this, and then, you know, he loaned to them. It's pretty secretive type stuff, and, you know, they don't want anybody to know about it. And I said, well, how's business? And he says, business is booming. He said, it is booming. It's better than it's been on the loan side in a long time. And he said, usually when things are bad, that's when my business is booming. But if you look out there, we think everything is great, right? And so, you know, just keep that in mind. But I always say there's two different kind of economies, right? What you got is, most of you and me, if you're watching this video and stuff, have appreciating assets, right? We own houses, we own stocks, we own crypto, we own sports memorabilia, art, you know, things that appreciate, especially with inflation, go up. Then you have people who just rent, who have no appreciating assets. They own a car, that depreciates. They rent out an apartment, maybe they own a trailer, but that depreciates as well. It does not appreciate. And so, you know, things of that nature. And that I told you, there's the income threshold, man, where inflation crushes you. I don't know what the exact number is. My guess is in certain parts of the world, or the country, excuse me, 50K, 60K, 75K maybe in California or something like that. In the South, it's probably more like 40 to 50K. But when you got gasoline, as I showed you yesterday, $1 more than historical standards, it was up $3 over historical standards, almost $6 a gallon at one point in time. Not, I mean, what was it, 7 months ago, 8 months ago? You know, and then you're sitting there with groceries, as somebody pointed out today, groceries really aren't coming down, not compared to other things. Okay, so you got to keep that in mind. And then you see where rents are at. Rents are just at crazy levels. Even though they're coming down in certain areas, they're still at crazy levels. Okay, and if you're only making a certain amount, especially if you only have one paycheck coming in the household, yeah, that's rough. Okay, so I think we need to keep that in mind, because the people who, you know, remember it was 125K. It's over half the country make 125K or less. I think it's like over 65, 70%. And so, you know, just keep that in mind. I think I presented that stats many months ago. And so, you know, that's what you got to keep in mind. That's why I said, yeah, the rates, if they keep them high, they're going to have an effect. You know, we just got to figure out when that's going to happen. All right. So just keep that in mind. Let me just think about that. But yeah, I'm a firm believer there's two different economies going right now. So, and that leads me into what you see happening now, right? One, we got to be very clear on is bulls are still in charge of this market, right? What do I mean by that? And one reason you know this is because puts are at their lowest price in historical standards here, right? I mean, you look down at the bottom, since I've been tracking this since like 07, and they're dirt cheap now compared to what they were, which lets you know bulls are in charge. And the other thing is just unbelievable, and especially in this economic environment, just look at these long monthly rallies. You got Meta post longest monthly rally on record, which is just stunning when you think about that. How many months it has been green right now. And then you come over here, there's Apple's monthly streak as longest since 2014. It's almost a decade. And I don't have to remind you, we were on a bull run from 2010 all the way to 2021, for crying out loud, and now it sets this record. And then you got Amazon streak as longest since 2018. Just look at all those monthly green candles this thing has had, which is just crazy. But today, you know, looking at the overall market, obviously huge, you know, a lot of green yesterday, but today, total opposite, right? I mean, high beta stuff took a beating today. And when you look at this stuff right here, some of these companies reported really good earnings this morning. But like I said, when you're running up into earnings, when you're up 100% going into earnings, you better dang well, you know, kill it and all that, because like when you're running down, you know, they're not expecting much out of your earnings. So all you got to do is keep the CEO from getting up on the desk, pulling his trousers down, taking a dump all over the earnings report, okay? I mean, that's just how the way it is. And a lot of these companies are running up huge into these earnings, and they're taking a dump, right? I mean, Chinese stocks went down because the manufacturing data out of China, like I've been saying, the economic data is not good, and all these runs have been about stimulus. Now, Who knew all you had to do at the start of this year was dump all your life savings into Nikola and Tupperware? That's the big joke right now, right? Because they're getting short squeezed like crazy, both garbage companies. But you know, that's what you're seeing happening, right? That's why I always say I get this 2020 vibe, you know, where you're seeing these companies that you think would be bankrupt by now, disastrous numbers. One of them's, well, maybe both of them are going to report Friday, and they're just running up double digits, even on a red day, because they're getting short squeezed. That's what's happening. So congratulations if you're in them. You know, definitely say that. But that's a big joke around Twitter right now. Now, looking at the stocks that were still green today, it's still been on these massive runs. Roku's one of them, right? You're seeing this massive run up, and it gets in this volume gap, and this thing can continue to run. I mean, this is a daily chart. You see that volume profile right there. So it can continue. If it continues to get pushed up, and it's a very popular name right now, you know, target 113, 115 area, you see this one keep running. Crowd strikes another one. You know, this kind of stocks I told you about, right? It's going up in another volume gap right here. It could run to 195, right? If they keep pushing this thing. And so this is another one just hammered down like dog meat. And now people are getting behind it. A lot of call buying on these two stocks, right? Palantir still can't get past that little supply area right there. But if it does, you know, like we said yesterday, you can see 23, 24. I'll guarantee you see a boatload of profit taken right in that area. Just mark my words on that one. We'll see. I could be wrong, but it can definitely push up to that, right? Because there's just not a lot of resistance there. Again, they have earnings coming up sometime. So, you know, like they've had such a big run up, they better freaking hang the moon for sure. And then you got Tesla with what it's doing. It's just kind of just trading this range right now between 254, 268. Again, it was red today, small gap down, but it's got just a graveyard of gaps below it. I think it's like 5 or something from here down to like 226 or something. And so, you know, we'll have to see again, what's the next catalyst for it? I don't know, because you're not going to be reporting car sales anytime soon that I'm aware of. You don't have any earnings coming up anytime soon. And so we'll see if it just kind of keeps staying and accumulating in this range for its next move, whether it's going to be up or down. We'll have to see. Again, I'm not seeing like call sweeps flying through or anything. You definitely not seeing any gamma squeezes coming through. But consolidating here, it isn't a bad thing, right? I think I talked about it a while back for people who want to see it go up some more. But again, you know, a pullback to fill gaps is not a bad thing to set up for your next run. Now, Meta, in this tight channel, I just changed this channel around. It's super tight, as you can see now, right? And I mean, obviously, it's another one. Got those gaps, but it was green today. You know, it did go up. Again, stunning to me that I had never seen this in this chart before. It has not touched that 50-day moving average the entire year. And we're 7 months in. I mean, that is stunning. Right? Maybe we'll make it all year. Maybe that's what we'll see. And that's what I was talking about, all those months, right? It set a new record for the number of green months in a row. Never had it before in all the 11 years it's been around, but here we are. And you can see why, right? So it makes sense that it hasn't touched the 50-day moving average. Now, earnings coming up. Obviously, tomorrow, we're going to sit here and have CVS, Humana, all the healthcare stuff coming through. Then you'll have Cameco. And then in the afternoon, tons of high beta stuff. And some of these, I mean, I think are going to move big time. You have PayPal, Shopify, Qualcomm, Oxy, Unity, Robinhood, and then Etsy at the bottom right there. So just keep that in mind. Yeah, again, there's going to be some big moves in after hours for sure. And the only kind of economic data I'm looking at tomorrow is going to be the ADP employment change. And I don't see that, you know, moving the market or anything, because that's a report that's usually like way off from the other one. It's usually, I mean, those two reports couldn't be any more different. But I think as you're seeing, we still have a hot jobs market, right? It's still a tight jobs market, I guess, is the better way to look at it. And so just keep that in mind. But yeah, earnings is going to be fun tomorrow after the bell for sure. Let me know if you're playing any of those and stuff. A lot of those, you know, PayPal's had a big run up. Almost every one of those have had a big run up. But these are stocks that got beat down, and the big money's been rolling into them, right? And they're taking profits off all those big ones like Tesla and all the rest of them, and then shoving them over into these kind of stocks and stuff. So just keep that in mind. I mean, fintech's been pretty hot overall. You saw SOFI yesterday, obviously big sell off today, but you know, it shouldn't be too much of a surprise. So we'll see. Let me know what you think about what's going to happen in August, September. I mean, I just did a members video on that to show them the actual charts of what happens. I'm not making it up. Like, here's the charts. You can see for yourself, right? So we'll see if we carry through with that or not. Again, I always tell people it's not a bad thing. Just have your list ready. That's all you got to do, you know, and just pay attention to you start seeing put premiums go up and up and up and up, then that's when you can maybe expect a bigger move down and stuff. But I don't see that happening as of now. But again, year first, right? So we'll see how it goes. So I hope you guys got something out of it. Hit that like and subscribe button if you did. Really appreciate it. Give me your feedback and stuff. And I'll see you tomorrow.